Hello, everybody. It's Thursday, December 4th, and the news cycle has officially lost its mind. In the last 24 hours, the United States suspended its planned sanctions on China, the Treasury executed the largest one-day debt buyback in American history, and Wall Street suddenly decided it actually does like Bitcoin. Charles Schwab, yes, the $12 trillion retirement fortress, is opening crypto trading to 40 million users. The UK now legally classifies crypto as property. Revolut just integrated Solana payments, and the CFTC rolled out a government-backed digital asset platform. But sure, Strategy's Bitcoin buying collapsing is definitely the sign of a bear market. Right, because nothing says bearish like every major institution sprinting into crypto at the exact same time. Folks, 2025 is drunk, and we're just here trying to read the charts. So today, we're breaking it all down. U.S.-China relations cooling, that record-breaking Treasury buyback, adoption going vertical, and what the charts are actually telling us, not what panic posts on Twitter are telling you. The Daily Brief starts right now.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's start with the biggest global shift of the week. The United States has officially suspended its planned sanctions on China. That announcement alone moved markets. But the context is what matters. This wasn't a minor adjustment. This was a near-total freeze on new export controls, signaling a deliberate attempt to ease tensions heading into 2026. Why does this matter for crypto? Because anything that reduces macro uncertainty reduces volatility, especially for Bitcoin, which trades like a high-beta macro asset every time the word geopolitics shows up in a headline. And today's early market reaction reflected that. Equities stabilized, yields cooled slightly, and Bitcoin found support right near the mid-92,000 zone. But then came the real surprise, something we haven't seen at this scale in decades. The U.S. Treasury executed the largest one-day debt buyback in American history, $12.5 billion in a single sweep. Now, buybacks like this are usually small, quiet, and frankly boring. This one was none of those things. A buyback of this magnitude does one very noticeable thing. It injects liquidity back into the system. And crypto, being the most liquidity-sensitive asset class in the world, reacts almost instantly. Of course, the headlines didn't say that. Instead, we got Treasury moves aggressively to stabilize markets, which is press release speak for, we just dumped a truckload of money into the system. Please stop panicking. So here's the connection. Cooling geopolitical tensions, plus a sudden liquidity boost, equals a foundation for Bitcoin to stop free-falling and start consolidating. Will this trigger a full reversal? Not by itself, but it absolutely reduces the downside risk. And with Bitcoin sitting right around that 92 to 93,000 range this morning, this macro environment gives it room to breathe. All right, adoption is exploding. Institutions are waking up, and TradFi just kicked open a very big door. Let's talk about Charles Schwab, the UK, and America's biggest banks suddenly loving crypto right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Now, let's talk about the real story of the week. Traditional finance finally stopped pretending it doesn't know what Bitcoin is. Charles Schwab, the retirement empire with $12 trillion under management, is rolling out Bitcoin and crypto trading to 40 million users. 40 million users. This is the kind of integration that changes market structure. Not hype, not a headline, infrastructure. The rails big money actually uses. And in classic boomer fashion, Schwab didn't even warm up. They went from crypto is risky to here's Bitcoin next to your S&P 500 index fund in about 5 seconds. Meanwhile, across the Atlantic, the UK made a move that barely got coverage, but it's enormous. Crypto is now officially recognized as legal property under British law. That means inheritance rights, insurance rights, court claims, asset recovery, the whole package. It cements Bitcoin and digital assets as real, enforceable property, not financial toys. And according to Michael Saylor, the U.S. banking system has gone through a, how do we say this, spiritual transformation. In his words, the banks have flipped. He's talking about Citi, JP Morgan, Wells Fargo, B of A, Vanguard, 8 of the top 10 U.S. banks now in some stage of digital asset integration, crypto-backed loans, custody products, internal pilots, all things they denied 2 years ago. Saylor basically said, they're late, but at least they brought snacks. And out of nowhere, the CFTC rolled out a government-backed digital asset trading platform. Yes, the same agency that has been yelling at exchanges for years launched one of their own. At this rate, the IRS is going to release a staking rewards calculator that actually works. But the implication is real. Regulators aren't just observing crypto, they're preparing to run parts of it. What we're seeing is coordinated onboarding from big banks, government agencies, major investment firms, and international legal systems. This isn't retail FOMO. This is structural adoption. All right, the institutions are pouring in, but one integration in particular caught my eye. Solana just partnered with Europe's largest neobank, and it might be the most important adoption story of the year. We'll break that down right after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's talk about Solana, because while everyone's staring at Bitcoin's price, Solana just pulled off one of the most important integrations of the entire cycle. Revolut, Europe's largest neobank with 65 million users, officially rolled out Solana payments, transfers, and staking. This isn't a pilot. This isn't a beta test. This is live. Revolut has long been a bridge between traditional banking and crypto onboarding, and integrating Solana at this level signals something very specific. They're choosing the chain that can actually handle real-world payment flow. No offense to Ethereum, but nobody is buying coffee on a chain where the transaction fee costs more than the coffee. For anyone wondering why Solana keeps winning these integrations, it's simple. It's fast, it's cheap, and it works for the only real metric that matters in payments: latency. Visa tested this. Stripe tested this. Now Revolut is deploying it. And when consumer apps choose a blockchain, that's a very different signal than when DeFi apps do. The geography here matters. Europe is far more open to regulated digital finance rails than the United States, and Revolut is one of their biggest distribution channels. This means millions of users, many who have never touched crypto before, now have a frictionless Solana on-ramp sitting inside the banking app they use every day. That's not adoption. That's deployment. Solana did take a hit earlier this week, dropping near the 100s and 20s before bouncing. Totally normal after weeks of grind-up and macro volatility. But integrations like this create demand that doesn't care about short-term chart movements. They create behavioral demand, where users transact because the feature exists, not because the price is pumping. That's how ecosystems become indispensable. All right, Solana's building faster than people can process, but institutions aren't the only ones making moves. The U.S. government just got involved in a way that raised more than a few eyebrows. Let's talk about the CFTC's new trading platform right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Now let's talk about the story that got the least attention, but might have the biggest long-term impact: the U.S. Commodity Futures Trading Commission, yes, the regulator that has spent years cracking down on exchanges, just unveiled a government-backed digital asset trading platform. A regulator launched an exchange. This isn't just another agency testing blockchain. This looks like the government building its own rails. And that means one thing. They're preparing for a world where digital asset trading is as normal as equities. It's also fun to imagine the same people who complained about crypto volatility now operating their own limit order books. From what we know so far, the CFTC's platform offers real-time settlement, regulated market access, compliance baked in at the protocol level, clear counterparty verification, which is interesting because those are the exact features regulators claimed the private sector lacked. So instead of waiting, they built it. So, is this good or bad? It depends on how you view decentralization versus adoption. On the positive side, a government-backed venue will accelerate institutional onboarding. Endowments, pensions, funds, all of them need regulated access points. On the other hand, regulators running exchanges creates a massive centralization concern, and it blurs the line between referee and player. But hey, if the government starts listing meme coins, at least we'll finally know who's been buying the tops. This move tells us the U.S. isn't trying to ban crypto. They're trying to absorb it. Regulate the rails, control the flow, own the infrastructure. And honestly, that's exactly what major nations do when they realize something isn't going away. All right, regulators are building exchanges, Revolut is onboarding millions, and Wall Street is sprinting in. But what are the markets telling us? Bitcoin's buy pressure collapsing, and what it really means is up next after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's shift from institutions and regulators to the charts because a very interesting data point hit the timeline this morning. According to CryptoQuant, Strategy's Bitcoin buying has collapsed through 2025. Not slowed, not softened, collapsed. And of course, the internet immediately decided this means the bull market is over because nothing says cycle analysis like panicking the moment a whale stops buying for 3 days. The chart doesn't show liquidation. It doesn't show selling. It doesn't show bearish reversal. It shows reduced buying pressure from one major entity. And that can happen for a lot of reasons. Strategic pause, waiting for lower entries, macro volatility, upcoming policy events, or simply, they bought enough for now. Not everything is a hidden message sent from the Illuminati of Bitcoin. Buying slows at the end of every aggressive accumulation phase. This is normal. This is healthy. This is how floors form. And notice the timing. Bitcoin has been consolidating around the low 90,000 range, not breaking down, not collapsing, just cooling. Whales don't buy during panic. They buy after it. Think about the bigger picture. Schwab onboarding 40 million users. UK legalizing crypto as property. Revolut integrating Solana. CFTC launching a government trading platform. And adoption going vertical across every demographic. In that environment, a slowdown in institutional buying is not a top signal. It's an accumulation reset. So yes, buy pressure is down. Charts are cooling. Volatility is rising. People are emotional. But the fundamentals, they've never been louder. If this is a market crash, it's the most polite one we've ever had. All right, let's zoom out from the headlines and take a look at the actual charts, because the markets themselves are telling a very different story than the panic posts on X. Bitcoin is trading around $92,800 after a failed attempt to break resistance near $94,000. The stochastic RSI is overbought, which explains the cooling. This is just mechanical rotation. Seller momentum is slowing. Buyers are stepping in around the mid-92,000 range, and volatility is compressing. In other words, this is not a disaster. This is Bitcoin doing its best impression of a tired dad at a Black Friday sale. Ethereum is holding around $3,190, and just like Bitcoin, it's flashing an overbought stochastic RSI. Not unusual, we saw a huge rotation into Ethereum over the last 2 weeks. Momentum slowing here is normal and healthy. XRP is sitting near $2.14, down about 2.5%. Nothing concerning, just the natural cool-off after a massive run driven by ETF inflows. And for the record, yes, you're allowed to take profit without the world ending. Solana bounced beautifully back to 142.50 after dipping earlier in the week. The stochastic RSI is overbought, but the bounce was clean and orderly. And remember, the Revolut integration we covered earlier, that's real-world demand, not hype-driven volatility. Cardano is hovering around 45 cents, following the same overbought then cooling pattern. Nothing unusual, nothing alarming. So yes, markets are red, but red isn't the problem. Weak fundamentals are the problem. And we don't have that. Instead, we have record global adoption, new banking rails, government platforms, and actual corporate deployment. If this is a crash, please crash more often. If anything, Solana looks primed for a structural uptrend, not a breakdown. All right, we've covered the macro, the institutions, the regulators, and the charts. But there's one more piece of the puzzle. Your questions. Let's head into the mailbag right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's get into your questions, your comments, and your beautifully unhinged proof of thought submissions. First up is from at Blockchain Burrito. Sen, if the U.S. Treasury is buying back $12.5 billion in debt, does that mean inflation is about to rip again? Great question, and not a crazy one. Debt buybacks can boost liquidity, but they don't automatically pump inflation. What they do signal is the Treasury wants smoother markets, lower volatility, and fewer cracks in the system. So no, this isn't turbo inflation. It's more like giving the economy a shot of espresso after a really long nap. Oh boy. At Solana Simp 420 asks, should I take the Revolut news as a sign to go all in on Solana? Oh, absolutely. Sell your house, liquidate your 401k, and maybe pawn a kidney. No, do not do that. Revolut integrating Solana is massive, but it's a structural story. It plays out over months, not minutes. If you're bullish, dollar cost average like a responsible adult, not like a caffeinated raccoon chasing green candles. At Macro Moose asks, I'm really liking these names today. At Macro Moose asks, why is Bitcoin dropping if adoption is exploding? Shouldn't the price go up? Welcome to crypto, where logic is optional and timing is a myth. Markets move on liquidity, not headlines. Right now, liquidity is thin, yields are jumping around, and traders are risk off. Adoption sets the floor, liquidity sets the price. Think of it like a gym membership. Just because you signed up doesn't mean you suddenly have abs. This one is from at NodeRunner Nick. Is the CFTC's new crypto platform bullish, or is it the start of government overreach? Honestly, it's both. Bullish because institutions finally get clarity and access. Concerning because regulators running exchanges feels like the fox guarding the henhouse. or the government guarding the meme coins? And my favorite question of the day is from @digital_dgen. Sen, do you think the government's new crypto platform will ever list Dogecoin? Yes, after they finish minting their own meme coin called Compliance Inu. I hear staking rewards increase every time you file your taxes early. All right, great questions as always. Keep them coming. Let's go over the SENB project update when we come back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, time for the SENB community update, and things are looking sharp today. SENB is trading higher today, up 4.92%, putting us back into that steady upward channel we've been building for weeks. Market cap now sits at $10,800, liquidity at $7,000, and, this is my favorite part, holder count has climbed to 51, a plus 15.91% jump in 24 hours. That is exactly what early-stage organic growth looks like. Net volume over the last 24 hours came in at $1,090, with net buys positive. Buy-side pressure is holding around 55%, and liquidity continues to thicken. Slow, steady pressure, textbook foundation building. The bonding curve sits at 53%, meaning we are officially entering the second half of the curve, where each unit of growth becomes more meaningful. And with Phase 1 now complete, a full month ahead of schedule, we are officially moving into Phase 2, which focuses on expansion, partnerships, creator onboarding, and utility rollout. And for those of you watching closely, yes, we are planning a major community event involving an airdrop. We're not saying who it's for yet, but the people who know. Bottom line, SENB is healthy, growing, and gaining attention the right way through real engagement, consistent output, and a community that's actually awake. All right, that wraps up your SENB update for today. Momentum is solid, the community is growing, and Phase 2 is now officially underway. If you're already part of the movement, keep your eyes open. And if you're new here, welcome to the early days. Now let's zoom out, breathe a little, and land this plane with today's final thoughts. Look, the markets are loud right now. Headlines, sell signals, buy signals, panic, hopium, all of it. But the truth is simple. We're watching the crypto ecosystem shift at a structural level. Governments are moving. Banks are flipping, institutions are entering, narratives are changing. And through all of that, our one job is the same every single day. Stay informed, stay grounded, and stay ahead. We've had a wild week already. The Thanksgiving special is out, Mascot of Madness is live, and tomorrow we've got more on the way. So make sure you're subscribed everywhere. YouTube, X, Rumble, and of course, SENBHeroMedia.com. And as always, stay sharp, stay curious, and stay decentralized. I'm SENB Hero. This has been your SENB Daily Brief, and I'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.